Hello, everyone. Hey, it's Greg Harrelson here with Century 21, the Harrelson Group, of course, with my partner and co-host, Abe Safa, also with Century 21, the Harrelson Group. And we just want to come together again for another episode of Myrtle Beach Real Estate TV. And today, Abe and I are going to be discussing some of the problems that we're kind of seeing right now with HOAs within the Myrtle Beach real estate market, all of Horry County. And quite frankly, this is happening all the way down from Florida, all the way up the coast, and probably most coastal areas in the United States, which we are very familiar with, of course. So, Abe, thank you for joining me again, and I look forward to the information we're going to provide.
As do I, Greg. Yeah, looking forward to it.
So let me just kick off, Abe, a few things. We surely do not want to, spread bad news, but we do believe we need to spread relevant news. And right now we just see some significant pressure on HOAs that is just coming out of the blue, completely unexpected. And a lot of HOAs are just not sure exactly how to handle this, but it revolves money. And typically at the end of the day, it comes from the homeowners themselves. So, Abe, I think one of the issues that we've been going through over the last month or maybe 2 months is insurance costs have risen. And whether it be condos, condo buildings where the insurance costs rose, or individual properties, residential homes, a lot of you have seen at least a doubling, if not a tripling of your insurance premiums when you're up for renewal. So if you're haven't been up for renewal, you're probably, when you do get up for renewal, unless something dramatically changes, you'll probably see a minimum of a doubling of your insurance costs. So this is happening. So with that being said, all the HOAs are going to have to deal with this also, because the HOAs, a lot of them have amenities. There's pools, clubhouses, workout facilities, basketball courts, tennis courts, and whatnot. They're likely going to experience increases in their insurance cost. And that increase has to be passed on to the homeowner, which a lot of times shows up in the homeowners association dues. But most recently, besides insurance, there's something else that's been going on. Just happened to us, or not to us, but it just happened to a specific building. And it's likely going to be problematic when it comes to either an assessment or HOA fees. And Abe, what happened, there's a building out there. I won't mention names because I don't want to put any negativity on complexes. This is not an oceanfront condo building. This is a golf course community in Myrtle Beach on the west side of 17. So it's away from the ocean. And what ended up happening is there's been new lender restrictions. And the lender, in order to loan on a piece of property, in other words, loan, like go to a regular traditional bank, and for them to loan on the property, they're now requiring that if the age of the roof is more than 11 years old, I believe it's 11 years, it could be 10 years, but I think it's 11 years. If it's more than 11 years old, they're requiring the HOA to have 100% of the roof's replacement costs in reserves. And let me tell you, most HOAs do not have 100% of roof replacement costs in their reserves. But if they don't have that much money in their reserves, then the loan, the condo is not warrantable, which means your traditional bank cannot give you financing, because the bank will give you financing and then they sell it. They sell the loan on the secondary market. Non-warrantable means they can't warrant that loan, so therefore they can't sell the loan. So now it's going to, that in that scenario, a building that did not need condo-tel-like financing at higher interest rates have to go get condo-like financing at higher interest rates. So who knows what that's going to do to that building's sales prices. It could increase inventory, therefore push down prices. But what's more likely going to happen over time is these HOAs are going to have to factor in budgeting for these types of items, which means they'll have to either assess or increase HOAs. So I said a lot there. Thanks, Abe, for just kind of holding tight. What are your thoughts and what are you hearing out there?
Yeah, I mean, I heard that as well. and honestly, it can't be happening at a worse time. I
Yeah.
mean, the dust hasn't settled yet from the insurance issues that we're having right now. So yeah, everything on the coastal front, whether it's all the way from Northeast all the way down to Florida, anything on the coastal has seen a significant increase in insurance. Now, many of you out there that own a condo in town maybe have seen an assessment so far. Maybe you haven't. If you haven't, then it's most likely that your policy has not come up for renewal just yet. But as soon as it comes up, we're seeing it every single place, an assessment and or HOA dues going up. So
Yeah.
now throw this into the mix, and now it's gonna be a mess, Greg. Like you said, most HOAs don't have the reserves in place, and it's not cheap to replace the roof on those buildings, especially some of these big developments with a lot of units in there.
Yeah.
And the money's got to come from somewhere, and
Yeah.
unfortunately, it's gonna come from an assessment and or increased HOA dues moving forward.
Yeah, it is kind of one of those perfect storms, right? Or maybe it's an imperfect storm. I don't know what's perfect about this storm, but it's one of those storms that just everything's just coming together at one time. Like you said, couldn't be happening at a worse time. We're just still trying to understand how we're going to navigate through the insurance. Now we're seeing that multiple buildings are being deemed unwarrantable and have the potential to be deemed unwarrantable, and so which is going to put pressure on HOAs to increase their reserves. You got the insurance issue even on non-condos, which is the residential communities that have amenities that have to be insured. The community that we live in has tennis courts and clubhouse, et cetera. That stuff's going to have to be insured at higher premiums. And most likely, even though we may have good reserves, they're not going to deplete the reserves. They're going to adjust their budget is what they'll do and increase the HOA payment. So then the last thing that that we've talked about before is some of these condo buildings that because of that one building a couple years ago that fell in Florida, and then one building here that didn't fall but got completely shut down because they were concerned that it was a risk of of something happening. You've got a lot of inspectors looking at all of these buildings that are 25, 30 years old and saying, gosh, do we need to go recertify these buildings and inspect them? And then what ends up happening when they start that process is they start finding out, wow, this building needs $100,000. This building needs $50,000 or $500,000. Where is that money coming from? It's going to the HOAs. So for you all that are involved in an HOA, I'm hoping none of this happens to you. I sure am praying it doesn't happen to me. But the reality is we need to understand that these things are happening in today's marketplace. These are very serious things that are taking place. It's really going on. This is not something that may go on. It's going on right now. It may or may not for your situation, but it's going on in the market right now. And you have to decide if you want to either get ahead of it, or if you're going to stay in one of these properties and you're renting this property, maybe talk to your rental company and say, what can we do to increase revenue? Because you don't want to be pulling money out of your pocket. You want to hopefully get it from the rental income that you're getting off of these condos. So be thinking about what can you do to improve the revenue, but not necessarily spend $50,000 in redoing your unit, because it's going to take a lot of revenue profit or a lot of profit to make up for that type of investment. But I'd be talking to my rental company and say, what can we do to increase our revenue and our income immediately to get ahead of this? Any other suggestions, Abe, you think somebody should do?
Yeah, I mean, I think that's a great start there, and take a look at your numbers. If this is an investment property for you and you've been renting it all these years, take into account that, okay, your HOA dues are going to be going up, and it could be a good amount. Take into account a potential assessment, and then reevaluate your numbers. I would maybe add about a 15% cushion for expenses, just to kind of make sure that your numbers make sense.
Yeah.
And then reevaluate. This is a good time to reevaluate your investment. Is this something that you want to hold on to if expenses start to go up either on the HOA side or on the assessment side? And make that decision sooner rather than later. Because it's a big deal. A condo not being warranted or being able to be warranted is a big deal as far as the buyer pool of potential buyers out there for it. It's going to require a bigger down payment. It's going to require a portfolio loan. It's not going to be a traditional loan. So it could be a bigger down payment. It could be definitely a higher interest rate, shorter term. So it's going to be a different buyer for that kind of property. So it will make it a little bit more difficult to get a buyer out there, which could lead to possibly lower prices at that point.
Sure. Yeah. All right, Abe. Well, there's the news for today. I'm sure next week we'll give you some additional data, but we knew that HOA is, we know, and we're dealing with this, in our transactions right now. So we wanted to go ahead and talk about this. It's very relevant and current topic. If there's anything we can do for you, there's our contact information at the bottom. Feel free to reach out to us. We'd love to help you navigate through a real estate transaction, or just offer you any advice and information that you might need, whether you're thinking about buying or selling now or in the future. We just want to be be a resource for you. Abe, thank you so much. And we will talk next week. Bye, everybody.
Thank you all for watching.